You're in the Business Insurance Zone with me, Steve Savant, national insurance columnist and financial color commentator. And all this week we're talking about post-Obamacare and Obamacare tax series, and today, the impact on wealthy Americans. But wait, it's the middle class as well with Ken Davis, CPA.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone, and I'm Steve Savant, your host. We're broadcasting to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And with us, day two, our good friend, Mr. CLU, CHFC, CFP, and CPA, Ken Davis.
Stephen, good to see you again.
Ken, it was shock and awe yesterday. If you missed this, if you missed yesterday's, what can I say? We tried to skirt around the political issues of Obamacare and the Obama tax situations coming up at the end of the year. I think we did a pretty good job.
Reasonably well.
And we tipped our hand that we're kind of neutral arbiters in the libertine mode, right?
Yeah.
And I want to talk today, this is the issue. We know all these things that are happening are going to hit our wealthy Americans. Everybody's there on that. We saw the numbers. We're doing the crunching, the 1040 issues. It's going to be punitive. And I'm just saying it the way it is. But I cannot believe, after doing the math and Ken doing his normal 1040 research, and you know Ken's the only guy I know that reads the tax facts on his vocational reading, over the weekend. So I cannot believe, Ken, and I'm kind of upset about this, that it's hitting the middle class. We're seeing the class warfare out on the street on all the political ads, but I'm telling you, our seniors are going to take it in the shorts big time on some of these numbers. Now, walk us through some of this, because it just does not stop.
Well, it's interesting. As I got on, I was curious about the taxation of Social Security income, and you and I have done some shows on it. I've done some articles on it. And what grabbed me was the adjusted gross income, then modified adjusted gross income, is only, I think it's $32,000 for individuals and $44,000 for married filing jointly. And I think that's very unfair, and maybe at one time those are high numbers, but because it's not inflation adjusted, it's become part of the middle class. Well, now we have the 3.8% Medicare investment tax, and that's not inflation adjusted either. So I personally think it's disingenuous to say they're going after the rich if they're not going to adjust that number for inflation, because 5, 10, 20 years from now, with inflation, even just 1, 2, 3% per year, that's going to creep into this whole thing.
And hold on just for a second, Ken. And least we forget the AMT. This has been going on and remember, just to show that we're equal opportunity offenders to both political parties, the Republicans had the presidency, the House, the Senate, and they all talked about adjusting the AMT, and it never happened. Now the AMT, which was targeting wealthy Americans back in the day, right? That's what it was targeted for. Right. Now it's all down into the middle class. And when you have no inflation adjustments, when you're using the tag word modified versus adjusted gross income, I'm telling you, it is going to hit the wealthy, no doubt about it. But wait, this is going to hit middle class, and I hate to say this because it shouldn't be happening in your golden years. I think it's yellow of the government not to own up that it's going to hit the seniors hard.
Well, not only that, the other thing too, which is buried because the other things are larger, is my understanding is when the sunsetting comes, the limitation on medical expenses, and who has the largest amount of medical expenses is the seniors, right? What is currently 7.5%, and that's supposed to go to 10%. Now, that doesn't say modified adjusted gross income or anything. It's 10% of AGI, and that's, let's say somebody has $30,000 of AGI. Well, then that's a $3,000 limit if they have medical expenses over $3,000.
But I thought Obamacare,
then they get a deduction.
But I thought that Obamacare was supposed to pick up this difference. I thought it was supposed to actually modify this.
Yeah, all I can tell.
Mitigate any of this?
No, all I can tell you is this is what the rules are going to be, and so add it all up. 3.8%. Yes, that's going to affect the wealthy people. However, remember we talked about modified adjusted gross income is not taxable income, and that's $200 for individuals, $200,000, $250 for married. And that's before deductions, itemized deductions. So they may very well, for individuals that would be 200 or at 160, 170, 180, which is still a lot of money. But now we're creeping down into the upper middle class situation in a lot of cases. Then remember the Medicare premiums go up if you hit higher levels on modified adjusted gross income again. And now 10% of AGI. I mean, and think about it. The people with passive income, with medical expenses, are seniors. You know, I would guess, I was looking at some numbers the other day, it wouldn't take too much more before a lot of people have their entire Social Security confiscated by these tax increases that are going after the seniors. So they say they're not going after Social Security, but they're taking it back incrementally with these this layered cake of taxes, a little bit here, a little bit there, and before you know it, it's all gone.
Now, Ken, back in the day, we were told the government would never tax our Social Security. It was going to be tax-free income. That didn't last long. Then they started to bump it up higher. And now we got a two-tier system, and I promise you, by the time we take constructive receipt of our first check, it's probably going to be all taxable, and this has nothing to do with what we're talking about today.
And I've got to tell you, just to be fair in the whole political thing,
okay,
the first presidential administration that passed the increase of the first 50% of Social Security was Ronald Reagan. That just hurts my heart, but it's true. So we're here to be true about it. It was Reagan that started it, but then other administrations along the way increased it, and neither the Democrats or the Republicans have ever faced it and scaled it back or inflation adjusted these limits. So they're all to fault, Steve. They're all at fault.
I can't believe it. I feel like, he's going, well, I could just see Ron now. Well, Ken, it wasn't intended. Well, they all say that's never intended. My problem is full disclosure.
Well, really. He did have a Democratic Congress for a while. So
okay, so what? He probably cut a deal with Tip O'Neill in the day. Those guys were partners in crime.
Could be.
What can I say?
Could be.
Again, we don't care about the politics. We care about the math.
Right.
And the math on the 1040 shows me that it's not just wealthy Americans. It's our middle class that are going to pay. And unfortunately, I have to say our seniors, which Ken and I are on the outskirts of senior land, right?
Right.
We are now, think about this, we're close to becoming the ARP nation ourselves. When we come back after this break, we're going to talk about all this and more with Ken Davis, CPA.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome back to the Business Insurance Zone. I'm your host, Steve Savant. With me, of course, is our CPA, Ken Davis, and we're talking about post-Obamacare and Obama tax issues. And there's going to be an end of the year. When you get back to by the time we get to the end of the week, we're going to be talking about all these things, a lot of tax issues. Remember, if you need tax advice, don't look to Ken and I, even though he's a practicing, well, he's not a practicing CPA, he's a CPA, but when you look at it, I just want to give you a heads up. You need to always look at a tax consultant before you go forward with anything that we're saying on this show. And especially if you're FINRA licensed as a registered rep, you need to clear anything we're talking about through your compliance department. Just want to give you a little heads up there.
Yep, sure.
Always saluting the flag of FINRA and the SEC. Now, I want to go back to this issue of real numbers. Now, when I'm looking at these numbers, the first one you popped out, and it was like, man, that was eye-popping. I hope every geriatric that's watching this show in Florida, Arizona, or wherever you're living, but those are your two big retirement states, I'm looking at this at going from my 7.5 limit to 10%. I was in shock when you said that, actually.
Yeah, on the AGI for medical expense deductions.
And we talked about this higher income tax brackets going up. When I get that for the rich, but now we're talking about Social Security. The combination of all this is what's killing it.
Right.
And remember, keep this in mind. This is why both husband and wife are living during Social Security. This gets worse when dad dies.
Well, it does.
Oh, my goodness.
And that's shocking. When as I go through these numbers, it's a real eye-opener, and I had no idea until I really started to dig into it. The fact is, the Medicare Premium increase and the new Medicare investment tax is $200,000 for individuals, $250,000 for mom and dad combined. Well, he dies. Well, now you're at this $200,000, and I forget what it is. I think it's over $3,000 increase per year in premiums for the individual, and it's actually less because of the higher MAGI of 250 for a couple. So she's not only lost her husband, and I'm saying that because the men unfortunately die early.
We do.
She has to pay that. So higher Medicare premiums may have lost some of the pension from the husband dying early, and maybe at 50 or 75% of that. So she's being nailed on that all at the same time. So first they're going after seniors, and it gets worse when they get single. And at the worst possible time when they're feeling really bad about their spouse dying and kind of at wit's end trying to make it all work.
When you're sitting with your accountant or CPA, we want to introduce you, like we've been doing the last couple of days. You're sitting there talking to your clients about, modified adjusted gross, right? You're talking about all these issues, and we're going to see some phase outs also in exemptions, and boy, I'm telling you, when we sit there, if Congress doesn't do anything by the end of the year, and I don't know what's going on, nobody can predict this now. I mean, the Obama administration wants the Bush tax cuts to go ahead and stay at the lower levels, keep those, but not for the rich. So I don't know if you're going to see this, because the Republicans in the House aren't going to let that happen. So I don't know what kind of loggerhead issues we're going to have at the end. But instead of dealing with it now before the election, this is going to go down to the wire. I don't see anybody bringing this to the table right now before, November, whatever it is.
Well,
6th.
It's going to be really interesting. They're going to have a lame duck session at the end of the year. There's going to be that short period of time in December where if they're going to make some changes, they've got a very short time to get it done. And unfortunately, that happens to be when tax law changes, is at the end of the year. And so it's going to be interesting depending upon who's in power at the time. And of course, the Republicans can block to a certain extent, but they only have one House of Congress.
Right.
And the Senate is Democrat, and the president's
I
Democrat.
think it would be, after, and especially if it was post, it would be a linchpin grenade for them to let everything sunset, because if they can't get it for one part of the country, maybe the whole country is going to get taxed.
One of the things I want to point out, and we're going to talk a little bit about additional marketing reasons why you want to do this, but from a practical standpoint, the law is so complex. We don't want to sit down with our clients and talk about all the details. What we want to talk about is the tax laws are sunsetting, so tax rates are increasing. There's a variety of different situations that are being hit, and there is a 3.8% tax on net investment income. I think at that level they can understand it, but we don't really understand until we do a tax projection. What the strategies we're going to teach on this show this week to employ to reduce the impact of these changes, and how we can use annuities and life insurance to help mitigate some of these issues. So I'm saying include the CPA, make them your friend, make them your ally, become a team player, let them run these numbers, because they know the tax law. We have no business trying to advise on taxes. What our job is to let our clients know that taxes are increasing and that they need to be looking at these things and working as a team member to make sure that we find ways to solve these problems.
And remember, to be really, never worry about the political spin that you hear over the talking heads on cable, because that is not the truth. We're mitigating the truth on the 1040. We're just telling you, here are the raw numbers. If anybody says that we're actually going to have a tax increase, right? Some people say, oh no, that's not a tax increase. We're just restoring the taxes that were already there. And I mean, this is why I'm saying, just get ready for the spin. It's going to be major league. And just for my, what are the Keynesian guys, right? The guys that are out there. If you guys want us to print money to retire our debt, I say forget that. Let the debt keep going. If you're going to print money in Washington, print it and give it to our seniors. I mean, if it doesn't really matter, right? And if we're printing dollar bills at the Kinko country, right, as I call the United States now, why not, instead of paying off China, why don't I pay my seniors? Instead of paying off all the foreign powers, why would I not go ahead and do that? This is what I'm talking about when I say full disclosure. Listen, if you're going to print the money, print it and give it to our seniors. When we come back tomorrow, we're going to talk about some of the solutions, some of the ideas. You can watch us on www.brokersalliance.com. Get in the zone, the business insurance zone.
The Biz is brought to you by Brokers Alliance, a national leader in insurance products, support services, and educational workshops. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.